Click the bell icon to get latest videos from Ekeeda.
Now we'll discuss the concept of non-integrated cost accounting system. In cost accounting, we are basically concerned with recording cost of production, cost of sales, so that we can decide the amount of profit to be charged and fix the selling price. Another objective of cost accounting is to have proper control on cost so that we can reduce waste and increase profitability. There are statutory requirements. Therefore, also we are required to maintain various cost records for the various purposes under the various laws for disclosure and filing. Therefore, every manufacturing organization is required to maintain its cost records for various advantages. There are two methods of keeping the cost records. One is called as integrated and another is called as non-integrated cost records. In case of integrated cost accounting system, we don't maintain two separate cost records for financial book and cost book. We record all the transactions in one unit of records, which is called as what? Integrated method of keeping the records of cost. Today we are going to discuss non-integrated concept of cost records. Under non-integrated concept, we maintain two separate set of books. One is financial book to record all transactions as per financial principles, rules of financial books. Similarly, all transactions will be recorded in cost book based on costing concept, costing principles, costing accounting standards. Those will be recorded in cost book. So here this system is called as non-integrated system. That how non-integrated cost recording system works, that we are going to try to understand now. If we see the features, first, separate books. There will be two separate set of books, financial book and cost book. Therefore, it is called as non-integrated. Books are maintained under double entry system of bookkeeping. That means for every transactions we record in the form of debits and credit. Cost manual. As number of employees are involved more in an organization, one must understand how to record the expenses, how to give treatment, how to give disclosure. For that purpose, to help those employees, accountants, there is concept called as what? Cost manual, which gives all details relating to that particular cost. Its recording, its understanding, its ascertaining, everything is included in cost manual. Voucher. Voucher means a document which is an evidence of transaction. Like financial book, in cost book also, we maintain accounting vouchers based on which we record entries in cost journal. Every account is maintained based on its nature. Like we have stores material control account, we have work in progress control account, finished goods control account. For every account, some code may be given for the purpose of classification and ascertaining the expenses, grouping of items, etc. Cost journal is maintained to record all transactions as identified by the accountant. Based on cost journal, we prepare cost ledger so that we can have summary of the transaction and we can prepare trial balance, and also we can find out profit or loss by preparing costing profit and loss account. We can now discuss ledger and controls accounts, subsidiary ledgers and corresponding control accounts. To complete the effect of double entry, in cost ledger we maintain cost ledger control account. In cost ledger we have consisting of all impersonal accounts. It is made self-balancing by maintaining a control account for each of the other three ledgers. General ledger, adjustment or cost ledger, control account. This account is essential to make the cost ledger self-balancing. All transactions of income and expenditure which originate in financial accounts are entered in this ledger for eventual transfer to cost account. The balance in this account will always be equal to total of all the balances of impersonal accounts. Stores ledger. This ledger consists of all stores account. Individual accounts are maintained for each item of stores. Stores ledger control account. This account is debited with all purchase of material for the stores and credited with all issues of materials. Work in progress ledger. In this ledger, cost of material, wages and overheads for each job undertaken is posted. Work in progress control account. It consists of all direct materials, direct wages, direct expenses, special purchases and expenses. Production overheads are debited to this account regarding total work in progress of different jobs at any time. Finished goods ledger. In this ledger, accounts of completely finished products, jobs are maintained. Individual accounts are maintained for each type of finished job or product. Finished goods control account. The total value of finished goods in stock is represented in this account. On sale of goods, the cost of such goods is credited to this account and debited to cost of sales account. Now let us discuss the unique concept of control accounts in cost accounting system. The cost ledger contains of two types of accounts to complete the double entry. A, cost ledger control account, and B, 3 cost control account, that is stores, work in progress and finished goods. Cost ledger control accounts. CIMA has defined cost ledger control account as an account which is maintained in principal ledger, and sometimes it is also called as what? Cost ledger, which records the total of transactions recorded in detail in cost ledger and provides a check of accuracy of the latter. Cost ledger control account helps to record all items of incomes and expenditure. The function of this account, which is also referred as general ledger adjustment account, nominal ledger control account, is quite important in cost accounting system. This account is open in cost ledger to complete the double entry. All items of income and expenditure taken from financial accounts and all transfers from cost account to financial accounts are recorded in this account. Thus, all the transactions in cost ledger must be recorded through cost ledger control account in order to complete the double entry in cost ledger. The balance in this account will be always equal to total of all the balances of impersonal account. In the non-integrated cost ledger accounting system, the cost control accounts mentioned above are kept separate from the financial ledger, which record all financial transactions. No personal accounts are kept in cost books, but as the latter are maintained on principles of double entry, all transactions which arise in financial accounts are debited and credited to cost ledger control account. Accounts maintained for this purpose, the cost ledger control account makes the cost ledger self-balancing. In fact, this account is equal to personal, cash or bank account as the case may be in financial book. Financial transactions such as those on account of material purchases, miscellaneous expenses, wages, salaries of workers, staff are credited to cost ledger control account by contra debit to various control accounts. Similarly, all sales are debited to cost ledger control account. Transfer from financial book to cost book, such as departmental capital work, made through this account. Purely cost accounting transactions involving no finances, example, transfer of manufacturing overheads cost to work in progress control account and transfer of finished goods from work in progress control account to finished goods control account, do not pass through the cost ledger control account because double entry in respect of transactions have already been complete without the cost ledger control account. Next is cost control accounts. The 3 cost control accounts are store ledger control account, work in progress control account and finished goods control account. Helps to exercise the control over the concerned subsidiary ledgers. Transactions kept in detail, one or more accounts in subsidiary ledger are posted in total at the end of the period to control accounts. Thus, the balance in control account represents the total contained in a number of accounts or similar nature in subsidiary ledger. For example, the balance in work in progress control account represents in aggregate the balance of respective job accounts. An account is maintained for each job. The main control account and their functions are summarized. Number 1, store ledger control account. It records material cost. Debits and credits, receipts debited are posted from goods received or receipt voucher, and issues credit from material requisitions or material issue analysis sheet. The accounts are also records issue of material to outside parties, returns through the return notes, stores inventory, and adjustment through material transfer notes. The balance of this account represents the total balance of stock, which should agree with the aggregate of balances of individual folios in stores ledger. Material purchase for a specific job are generally debited to work in progress control account and not to stores ledger control account, because it becomes part of overheads. It will be considered as factory overheads. Wage control account records labor cost. This account records labor transactions. Debits and credits. Entries are made from wage analysis sheet. The account is debited with gross wages and is credited by transfer of direct labor to work in progress, indirect labor to factory overheads, administration overheads, selling and distribution overheads, as the case may be. Factory overheads control account records overheads cost. This account deals with manufacturing overheads expenses. Debits and credits. To this account is debited the amount of indirect materials, indirect labor, indirect expenses incurred. The figures are obtained from material issue analysis sheet, wage analysis sheet, the expense analysis sheet. The account is credited with amount of overheads recovered as obtained from the applied overhead analysis sheet. Where separate overhead apply account is open, credit is given to this account. Work in progress control account. This account is debited with opening balance of work in progress of material, labor and factory overhead cost recovered. Credit. This account is credited with cost of finished goods. Balance. The balance of this account represents unfinished closing stock in progress carried over. Finished goods control account. Debits. This account is debited with the opening balance of finished goods, the cost of finished goods for the period transferred from work in progress control account, and the amount of administration overheads recovered if administration overheads is not treated as period cost. Credits. It is credited with the cost of sales by transfer to cost of sales account. The balance of this account after writing back the unrecovered administration overheads represents unsold stock carried over. Administration overheads control account. Debits. Administration overhead cost is debited to this account. Credit. The amount of overhead recovered in finished goods sold is credited. Another method is to close the administration overhead account by transfer to costing profit and loss account. In this case, no amount of administration cost is charged to finished goods account. When administration overheads is proported to manufacturing, selling, distribution overheads, the administration overhead account is credited with the amount so transferred. Selling and distribution overheads account is debited. Selling and distribution cost are debited to selling and distribution overheads account. Credits. At the end of the period, the account is closed by transfer to cost of sales account. Next, cost of sales account. Debit. This account is debited with cost of goods sold and selling and distribution overheads recovered. Credit. It is closed by transfer of cost of sales to costing profit and loss account. Overhead adjustment or suspense account. Debits and credits. The amount of under absorbed or over absorbed factory administration, selling, distribution overheads may be debited or credited to this account. Sometimes this account is not maintained and the amount of under absorption or over absorption is transferred directly to costing profit and balance. The balance at the end of the period may be either carried over to the next accounting period or transferred to costing profit and loss account, or prorated, that is charged pro rata to cost of sales account, work in progress account and finished stock account. This depends on the company's policy how it will be treating the balance amount of overhead suspense account. Costing profit and loss account, debits and credits. This account records the transfer of the amount under absorb or over absorb overheads, the sale value of goods sold, and the balance from the cost of sales account. Abnormal losses and gains to be kept out of cost are also debited or credited to this account. Balance, the closing balance of this account represent costing profit or loss, which should be reconciled with financial profit or loss. Let us discuss now journal entries under non-integrated costing record system. Journal entries under non-integrated costing system. First, relating to materials. At the time of purchase, we are required to debit stores ledger control account and credit cost ledger control account. If purchased on special requirement for a job, then it will not be recorded to stores account. It will be debited to work in progress control account and credited to cost ledger control account. When material returned to vendor, this is purchase returns, stores account will be credited and cost ledger account will be debited. When direct material issued to production, from stores materials are issued to jobs for processing. Here we are going to debit work in progress account and credit stores ledger. Work in progress control account debit to store ledger control account. When indirect material issued to production, indirect material when it is issued to production, it will be treated like a overheads. Production overheads control account debit to store ledger control account. When material returned to stores, this is return inwards. Material is returned from job to stores. So your store account will be debited and respective work in progress account will be credited. Now let us see entries relating to labor wages. When wages are paid to workers, it's an expense. Wage control account will be debited and cost ledger control account will be credited. When wages for direct labor charged to production, work in progress control account will be debited, wage control account will be credited. When wages for indirect labor charged to production, it will be treated as production overheads. Therefore, production overheads control account will be debited and wage control account will be credited. Next, we shall look into the entries relating to production overheads, that is factory overheads. When production overheads are incurred, production overheads control account will be debited and cost ledger control account will be credited. When production overheads recovered or absorbed, work in progress control account will be debited and production overheads control account will be credited. Next, for administration overheads. When administration overheads are incurred, administration overheads control account will be debited, cost ledger control account will be credited. When administration overheads recovered, finished goods ledger control account will be debited and administration overheads control account will be credited. Next, selling and distribution overheads. When selling and distribution overheads are incurred, selling and distribution overheads control account will be debited, cost ledger control account will be credited. When selling and distribution overheads recovered, absorbed, cost of sales account will be debited and selling and distribution overheads control account will be credited. Transfer of under and over absorbed overheads. In case of over absorption of overheads, we are required to debit production, administration, selling and distribution overheads control account and credit cost ledger control account. In case of under absorption of overheads, cost ledger control account will be debited and production, administration, selling and distribution overheads control account will be credited. Sales, cost ledger control account will be debited. Costing, profit and loss account will be credited. Profit or loss, in case of profit, costing, profit and loss account debited, cost ledger credited. In case of loss, cost ledger account will be debited and costing, profit and loss account will be credited. Now let us have comparative look for a particular transactions in financial book and non-integrated cost book. Entries in financial and cost book. The entries in both financial and costing books are explained with the help of example. Transactions relating to materials. Material amounting to 58,300 are purchased on credit. In financial book, our entry will be purchases account debit to sundry creditors 58,300. In cost book, our entry will be store ledger control account debit to cost ledger control account 58,300. Return to supplier goods of 200. In financial book, our entry will be sundry creditors account debit to purchase return account 200. In cost book, our entry will be cost ledger control account debit to store ledger control account 200. Cash purchases of rupees 1000. In financial book, our entry will be purchases account debit to cash. In cost book, our entry will be store ledger control account debit to cost ledger control account. Stores issued to production rupees 54,700. This is an internal transaction where from stores materials are issued to particular jobs. This transaction is not recorded in financial book, but in cost book we are recording this transaction as work in progress control account debit to store ledger control account. Individual job order number will be debited with the amount as mentioned in material requisition notes summary, and individual stores account will be credited from the material wise summary of MRN, that is material receipt note. Stores issued to maintenance account 2,500. This is internal transaction where from godown some stores are being issued to jobs or to plants for maintenance purpose. This will not be recorded in financial book, but in cost book it will be recorded, treating it as a overheads. Overheads control account will be debited, store ledger will be credited. Material returned from production or service cost center to stores or material transferred from one job to another will have no effect in financial book as no financial transaction is involved. Similarly, when sundry creditors are paid for the suppliers, no entry is made in cost ledger as it does not involve any use of material but a pure financial transaction. Transactions relating to labor. Salaries and wages amounting to 62,100 gross and earned by the employees and deduction of 5,400 as provident fund, rupees 2,400 as ESI contribution, 4,300 as income tax are made from gross amount. In financial book, our entry will be salaries and wages account debit for the gross amount 62,100. For employees contribution to provident fund, it will be credited to provident fund 5,400. ESI contribution of employees credited to ESIC account 2,400. Income tax deducted from the salary TDS, it will be credited to income tax account. And the amount actually paid to the employees, that is net payment made, will be credited to cash bank 50,000. In cost book, when we record this entry, our entry will be salaries and wages control account debit to cost ledger control account 62,100. In cost ledger, only gross salaries and wages is recorded. The deductions are ignored. Salaries and wages analysis book indicates the following breakup. Direct wages 38,600, indirect factory wages 9,500, administrative salary 9,700, selling and distribution salaries 4,300. In financial book, there will not be any entry for this allocation. In cost book, for direct wages, it will be considered as work in progress ledger control account 38,600. Indirect factory wages, production overheads control account debit 9,500. Administrative salaries and selling and distribution salaries, administration overheads control account 9,700, selling and distribution overheads control account 4,300, two salaries and wages control account 62,100. In work in progress ledger, individual job cards will be debited with direct wages and salaries, and wage control account acts as a clearance account. Transactions relating to overheads. Expenses to the extent of rupees 25,400 were incurred on credit for various services obtained as follows: manufacturing 12,000, administrative 8,000, selling and distribution 5,400. In financial book, our entry will be sundry expenses account debit to sundry creditors 25,400. In cost book, our entry is production overheads control account 12,000, administration overheads control account 8,000, selling and distribution overheads control account 5,400 to cost ledger control account of 25,400. Rupees 900 paid cash for services rendered to factory 400, office 500. In financial book, simple entry will be expenses account debit 900 to cash account. In cost book, we have to record production overheads control 400, administration overheads control 500, depending upon the nature of expense, to cost ledger control account 900. Rupees 24,000 paid to creditors for outstanding bills. This will be recorded in financial book sundry creditors to cash, but in cost book it will not be recorded because it's a purely financial transaction. Regarding absorption of overheads and transfer of under or over absorbed overheads, no entry needs to be passed in financial accounts. In cost ledger, each of the overhead control account will be credited with the overheads applied, and the difference between the actual overhead expense incurred and applied overheads will be transferred to overhead adjustment or overhead suspense account. At the end of the period, the net balance will be either transferred to costing profit and loss account, carried over to next accounting period, or applied to on cost of sales, finished goods inventory and work in progress inventory by using supplementary rate depending on the decision taken by the management. Let us have summary of entries. Transaction: purchase credit or cash. In financial account, purchases account debit or stores account debit to sundry creditors. In cost ledger, store ledger control account debit to cost ledger control account. Cash purchases of material for stock, purchases account debit to cash account. In cost ledger, our entry will be stores ledger control account debit to cost ledger control account. Purchase of material for special job. In financial book, our entry will be purchases account debit to sundry creditors if credit, or to cash if cash is paid. In cost ledger, our entry will be work in progress control account debit to cost ledger control account. Purchase of material for immediate repair work. In financial book, entry will be purchases account debit to sundry creditors if purchase on credit, or cash if it is cash paid. In cost record, it will be treated as factory overhead. So factory overheads control account debit to cost ledger control account. Material returned to supplier from stock. In financial book, it will be entry for purchase return, sundry creditors account debit to purchase return account. In cost book, the entry will be cost ledger control account debit to store ledger control account. Payment to creditors for supply made. In financial book, the entry will be sundry creditors account debit to cash. In cost book, there is no requirement of entry because it's a purely financial transaction. Issues of direct material for production. This is an internal activity, internal transaction. This will not be recorded in financial book, no entry. In cost book, the entry will be work in progress control account debit to store ledger control account. Issue of indirect material to production. There will be no entry in financial book. Factory overheads control account debit to store ledger control account will be recorded in cost book. Return of direct material from shop to stores. There will not be any entry in financial book. In cost book, stores ledger control account will be debited and work in progress account will be credited. Return of indirect material to stores. Store ledger control account will be debited and factory overheads control account will be credited in cost book. In financial book, there will be no entry. Material transferred from one job to another. There is no need of entry in financial book. In cost book, our entry will be job ABC to job XYZ. Job ABC is the receiving job and job XYZ is issuing job. Adjustment of normal deficiencies in material stock on physical stock taking. There will be no entry in financial book. In cost book, the entry will be factory overheads control account to stores ledger control account. Adjustment of normal surplus found on stock taking. In financial book, there will be no entry. In cost book, stores ledger control account to factory overheads control account. Payment of wages, direct or indirect. Wages account debit to insurance, to tax, to provident fund, to cash in financial book. In cost book, wage control account debit to cost ledger control account. Analysis and distribution of wages, no entry is required in financial book. In cost book, the entry will be work in progress control account debit for direct labor, factory overheads control account debit for indirect labor, administration overheads control account debit for office salaries, selling and distribution overheads control account debit for sales staff salaries. 2. Wage control account. Direct expenses for job, work in progress account debit to cost ledger control account. There is no need of entry in financial book. Payment for expenses and services, example rent, power, repairs, etc. Expenses will be debited, sundry creditors debited if it is not paid immediately. If paid, cash will be credited. In cost book, factory overheads control account debit, administration overheads control account debit, selling overhead control account debit to cost ledger. Recording of depreciation charges for the period. In financial book, the entry is depreciation account debit to capital asset. In cost record, factory overheads control account debit for factory asset, administration overheads control account debit for office assets, selling and distribution overheads control account debit for sales department asset to cost ledger control account. Absorption of manufacturing overheads. There will be no entry required in financial book. In cost book, the entry will be work in progress control account debit to factory overheads control account. Spoiled or defective work, no entry will be there in financial book. In cost book, costing profit and loss account debit to work in progress control account. Scrap taken on stock charge, no entry will be there in financial book. In cost book, stores ledger control account debit to work in progress control account. Recording cost of job, goods completed, no entry required in financial book. In cost book, finished goods control account debit to work in progress control account. Recording cost of goods sold, no entry required in financial book. In cost book, cost of sales debit to finished goods control account. Recording of sales in financial book, debtors account debit or cash account debit to sales account. In cost book, cost ledger control account debit to costing profit and loss account. Absorption of administration overheads, no entry is required in financial book. In cost book, finished goods control account debit to administration overheads control account. Absorption of selling and distribution overheads, no entry is required in financial book. In cost book, cost of sales account debit to selling and distribution overheads control account. Under absorb factory overheads, administration overheads, selling and distribution overheads, no entry required in financial book. In cost book, costing profit and loss account debit to factory overheads control account to administration overheads control account to selling and distribution overheads control account. Over absorb factory overheads, selling overheads, administration overheads, no entry is required in financial book. In cost book, factory overheads control account debit, administration overhead control account debit, selling and distribution overheads control account debit to costing profit and loss account. Cost ledger control account is also known as general ledger adjustment account. No entry in control accounts. In work in progress ledger, the respective job accounts are debited and credited. If however capital and overhead orders are involved, necessary transfer entries in capital assets and overhead accounts will be required to be made. What are the advantages of control account? First, it provides summary of all transactions. Secondly, we can prepare costing profit and loss account with the help of those control accounts. It is useful tool for internal check on cost. It keeps internal processing and treatment of expenses and other items confidential. It is very useful for stock valuation of raw material, work in progress and finished goods. Disadvantages of control account is interlocking system, that they effectively many transactions are posted twice. Many transactions are posted twice, once in each set of ledger. This is time consuming and costly. Also, profit shown by cost accounting ledger differs from that shown by the financial accounting ledger, and therefore reconciliation is required. Thus, we have understood how non-integrated costing record system works. We have discussed all journal entries, we have discussed all control accounts, we have also had a comparative view of entries in financial book and cost book for the same transactions. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.